What's up, everybody, and welcome back to another installment of 5 Things to Know in the Market. This week, I am your host, MIA, but before we get started, just a reminder, we are live each and every weekday, 9 a.m. to 4 p.m. with live trading strategies, in-depth analysis, and breaking news in real time. So be sure to like this video and subscribe to the channel. Hit that notification bell so you know each and every time we go live or bring you one of these time-sensitive videos. And now let's get right into it. First up, again, we have earnings season continuing to wind down with more major retailers set to report, including Target, Lowe's, Costco, Dollar Tree, Nordstrom, Kroger, and Best Buy. And of course, let's not forget the beloved AMC set to report Tuesday after the bell. So far, major retailers have reported solid results, with Walmart reporting earnings last week that topped analyst estimates driven by greater spending on necessities and consumer staples. Retail sales here in the U.S. surged by 3% in January, the Census Bureau reported last week, indicating that consumer spending remained strong despite persistently high inflation and the Fed's interest rate hikes, which we will get to in just a little bit. Next up, we will be looking at the Purchasing Managers Index, or PMI numbers. PMI is an index of the prevailing direction of economic trends in the manufacturing and service sectors. It consists of a diffusion index that summarizes whether market conditions, as viewed by purchasing managers, are expanding, staying the same, or contracting. The purpose of the PMI is to provide information about current and future business conditions to company decision makers, analysts, and investors. Next week, the Institute for Supply Management and the index provider S&P Global will release PMI readings for February, tracking the strength of the U.S. manufacturing and service sectors. The ISM Manufacturing PMI is projected to rise slightly to 47.9, up from 47.4 in January, rebounding slightly after 8 consecutive months of declines amid a slowdown in the industrial sector. The ISM Non-Manufacturing PMI is projected at 59.2, as services activity remains strong amid a shift in consumer spending preferences from goods to services. Any reading below 50 on this indicates a contraction in business. Obviously, any reading above 50 shows expansion. So we will be looking for those numbers. And then next we will be looking at updated home prices. The latest updates on home prices will become available on Tuesday. Index provider S&P Global will release its Case-Shiller National Home Price Index for December, while mortgage originator Freddie Mac will issue its House Price Index tracking prices of single-family homes. Home prices as measured by the Case-Shiller Index are projected to have fallen 0.7% in December, which would mark the 6th straight month of deflation in prices. Year over year, however, the index is forecast to have risen 6%, decelerating from 6.8% in November and a peak rate of 21.3% in April of last year. This would mark the smallest annual increase since September of 2020. In the most recent report for November, prices in Miami recorded the biggest annual increase at 18.4%, while those in San Francisco were down 1.6% from a year earlier. And moving on to those Fed rates we were talking about earlier, we have more fedspeak this week with 3 governors slated to give speeches, headlined by Governor Jefferson's speech on Monday on, quote, recent inflation and the dual mandate. With strong labor numbers and a hotter than expected PCE number, any fedspeak can easily create some volatility in the market. Rate hikes for March, May, and June may be priced in at this point, but will those all be 25 basis points? That is yet to be seen. So fedspeak may not send the market one way or another, but will definitely create some volatility. And as always, this will be in how the media portrays those headlines coming out of those speeches. And lastly, we will be keeping an eye on the Supreme Court hearings on student loan forgiveness. So on Tuesday, the U.S. Supreme Court will hear 2 cases that could determine the fate of President Biden's student loan forgiveness plan. The program was announced on August 24th of last year and seeks to cancel $10,000 of student loan debt per eligible borrower, or up to $20,000 for Pell Grant recipients. If the Supreme Court upholds the program, more than 40 million borrowers could see part or all of their student loan debt canceled, costing the government roughly $400 billion. If the court, however, blocks the program, borrowers could face greater financial hardships in paying down student loan debt compared to before the pandemic, amid rising interest rates, particularly once the pause on student loan repayments expire later this year. So we will be keeping an eye on that, not just for the market, but I think that affects a lot of people just in everyday life. And that is all for this week's installment, ladies and gentlemen. Be sure to check us out weekdays, live 9 a.m. to 4 p.m., and everybody have a fantastic weekend.